Hi, madam. I'm Divashini. So today I'm here to discuss about my assignment absorption question. So this is the question of my assignment. So assignment. So this is assignment 1. So for the first thing they had asked for calculate the goodwill arises from the absorption. So first we need to calculate the goodwill. For the goodwill we need to write the purchase consideration. And we need to calculate the purchase goodwill for the absorbed company, which is in the question they stated, Access Berhad agreed to acquire all the assets, so we need to calculate for the piece. And for the purchase consideration, we have ordinary share, which we need to take it from the additional. So here it is, which is issuance of 800,000 units of Access Berhad ordinary share, each valued at 1.25 ringgit. 1 ringgit, 25 ringgit. So we need to calculate. And then the second is preference share. So in the additional, there are 6.5% preference share to 85,000. So 6.5% preference share. The amount is 285,000. And then debenture, which is 6% debenture, 390,000. 6% debenture, 3,900,000. Yeah. So now we need to calculate the liquidation expenses. So for the liquidation expenses, we need to take the percentage that given in the additional. So liquidation the calculation will be 11,000 times 35%. So that's all for the purchase consideration. We need to plus everything. Okay, and then this is the total purchase consideration. The purchase consideration. And then we need to do net asset value. Net asset value. For the net asset value, we should list down all the assets that given in the question. So the first one is land and building. Okay, we can see here the land and building, plant and machinery, fittings, and then inventories, trade receivable, and then we need to minus the liability, which is trade payable. So for this amount also we need to take it from the additional. The additional, the fair value of land and building is 1,550,000. So okay, and then plant and machinery 77,000. They didn't give fixtures and fitting and fixtures, so inventory is 79,000. Trade receivable is 20% written off. So for the fixture and fittings, we need to take it from the question, which is from the piece fixture and fittings 50,000. So for the trade receivable, we need to do calculation. We take the trade receivable amount 100,080. 100,080 times 20% are written off. Okay, 20% are written off, so we need to minus the 20% with 100% and remain will be 80%. So now we need to calculate times 18 10. So the answer will be 80064. And for the bank, they had stated Access Berhad agreed to require all the asset except for 25% of its cash in bank. So they didn't take the 25%, so we need to calculate for the balance, which is 100 minus 25. So bank amount we need to take from Sophie 9500 times 75%, and the answer will be 67876 So trade payable we need to minus. We need to take the trade payable amount from Sophie 40370. So the net asset value is we need to plus everything. This is the net asset value. And for the goodwill, to calculate the goodwill, we need to minus the purchase consideration amount with net asset value. So this is our total number of goodwill. So that's all for the question A. This is for the A. And the B required to prepare relevant journal entries in the book of Peace Berhad. So we need to do relevant journal entries for the Peace account. So for the first one, first journal is record the purchase consideration. We need to record the purchase consideration. So J1, we need to debit the exalted company name, which is Excels. We are doing for Peace, but we need to debit it for that because we are transferring the purchase consideration to Access. So we need to write that Access and credit it realization account. And this amount is from the total purchase consideration. So these are the journal 1. So for journal 2, we need to transfer out all the assets. The objective is transfer out all the assets. So for this, we need to list down all the assets in credit and debit the realization account. So when it's all asset, we just copy paste this. But for this, we need to take it from the Sophie, except for that receivable and bank because they have calculations. So we need to take it from the Sophie. So land and building is 816,200. Plant and machinery is 8760. Kitchen and fittings 50,000. Inventories it's 89,600. And trade receivable and bank we need to take it from the goodwill. This is trade receivable and pen. So the realization account, we need to class everything. So this is the total assets that transfer out. So for J3 is we need to transfer out the liabilities. J3 transfer the liability, which is we need to transfer out the trade payable. So debit, we need to debit the trade payable and credit the realization account, and the amount also will be taken from the fee, which is 4370. Okay, and then we move to J4. J4 is itemized purchase consideration that had been received. So J4 is about itemize the purchase consideration, which is we need to debit the ordinary shares in investment, ordinary share preference shares. So the first one will be investment of ordinary share in excess. And second one is investment in 6.5%. Yes. And then 6% of debentures. And then we need to debit the realization account of liquidation expenses. And also last, credit the excess company. So for this, we need to take the amount from goodwill. So from goodwill, the investment OS is this one. Preference share 6.5% preference share, and debenture 6% debenture, and liquidation expenses is 3850. And when we total up everything, we should get the total purchase of consideration. And yeah, we got it. So this is journal. This is for journal 4. And journal 5 is transfer J4 to the respective owner. The respective owner is SMA, which is sundry member account. So for the J4, J5, we need to debit credit the J4, which is debit is sundry member account of OS. Sundry member on OS. And then the credit is investment in OS of excess, and the amount will be from J4. Same goes to the second one, SMA PS. The credit is investment in 6.5% PS, and the amount also from J4. Okay, and then we need to do for the debentures. So for debentures, a debit is debenture holder account. Debenture holder account, and the credit is investment in 6% debenture excess. So this amount also from G4. We should not enter the realization liquidation expenses in journal 5. So that's all for journal 5. And continue with journal 6, which is zeroize the bank amount in Sophie. So we need to zeroize all the amount in bank amount in Sophie. So now journal 6. Journal 6, there will be debit. There will be debit and credit. Debit and credit. So first we need to do the credit bank side. So for the bank amount, we need to minus the amount from Sophie and J2. So the amount from Sophie is 9,500, and we need to minus from the journal 2. So the bank amount will be 22,625, and then we need to credit the realization account, which is LE, and also SME to S. So realization account LE, we need to calculate the balance realization liquidation expenses, which is 11,000 times 100 minus 35, because we need to pay the rest 65%. So the amount is 7150, and we need to minus the bank and realization account in order to get the SME OS. So that's all for journal 6 and journal 7. Now journal 7. Okay, journal 7 is we need to carry out all the preference share, general reserve, return profit, ordinary shares, and also debentures. So for journal 7, I'll do for preference share, which is the question is 6% preference share, 6% preference share, and the credit is SMEPS. So the amount is 200,000. So this is journal 7, and continue with journal 8 for ordinary share. Ordinary share, SME US 486,620. And then journal 9 about debenture. The question is 5% debenture. 5% debenture will be calculated under SMEOS, and the amount is 275,123. Okay, and then continue with J9. J9 is for a general reserve. Okay, J9 is for general reserve. General reserve SMEOS. So the amount is 154,190. And continue with journal 10. So the general reserve, it is a retained profit. Retained profit. So the amount of retained profit is 7,960. And then journal 6 SMEOS 7 PS 8 OS and 9 Okay. 8, 9, 10, 11, and last journal 12. Journal 12 is for threat receivable because they have said that there are 20% of return off, so we need to calculate the 20% of return off. Okay, this is realization account LE, and then this will be threat receivable. Threat receivable. So for this calculation, we need to calculate threat receivable 1080 times the 20% of return of the 20%. So 20%. So this will be the return of amount 20016. So these are the journal for piece, and then after the journal we need to do realization account. Okay, for the realization account we do beside this realization account. Okay. Okay, for the realization account, first we need to list down all the journal to things at debit until bank. So copy, paste. Okay. Okay, and then we need to take the amount also from journal 2. Okay, and then we need to do the credit side, which is we need to take the amount from journal 1 and journal 3. So journal 1 realization account in debit, so we need to credit the excess. Excess, the amount is from journal 1, and then realization account trade payable we need to debit. So here we need to do realization account LE, realization account bank, and also trade receivable, array of trade receivable. Trade receivable. So RLE is we need to take from RLE, we need to take it from the goodwill 3850. And realization account bank, okay, we need to take it from here, which is 7150. 7150, and the trade receivable will be 20016. So first we need to tally the debit and credit account in order to find the sundry member account amounts. So these are the total, these are the profit. I know profit, these are total number of debit side is 1215515. So we need to tally this amount, and then we need to minus this two amount in order to get profit. 215515. So our profit is 503705. So this is the profit for this, and then after the profit we need to do three calculations, which is SME, PS, and since we have debenture we need to DHA, and also SME OS. So SME PS we need to calculate the SME PS is new amount minus old amount. So new amount is on additional, so SME PS new amount 285123 minus the old amount of differential is 200. Okay, 8500, and then DHA also same, new minus old, so debenture new is 390. The old is 275. So these are the amount, and in order to get SMEPS, we need to take the profit amount minus SMEPS minus DHA. So the SMEOS will be 303705. So that's all for the realization. So once we done the realization account, we need to do journal 10, which carry out the profit. So J10 is debit realization account and credit SMEPS, credit SMEOS, and credit DHA. So the realization account, we need to take the profit. This is the profit, and for SMEPS, we need to take this amount, SMEOS this amount, and DHA is this amount. So that's all for Journal 10. Okay, once we done Journal 10, we need to do a separate DHA account, because for the last we will do SME columnar ledger. In the SME columnar ledger, we could not add the DHA, which is debenture holder account. Okay, so for DHA, we need to do. Okay, this is for DHA. Okay, for the first for the debit side. Okay, first for the debit side, we need to put the amount that we need to put the amount that we get in here. Investment in 6% of debenture. So investment in 6%. percent eventual excess. The amount also seen from here, and then credit the Sophie amount debentures, which is from Sophie 275,000, and then we also need to minus the realization account amount, which is we got from here. Not minus, we should add in debit side. So when we calculate this both, it need to be tally. So this is DHA, and for the last we need to do SME columnar ledger. Okay, I'm doing down here. It's okay, I do at the B side. SME columnar ledger plus SP. So this is OS, yes, yes. So in the debit side of SME columnar, we should add the investment in excess from journal. Okay, journal 5. Investment in of excess. Okay. Investment of this, and the amount will be OS is 100,000, PS is 285,000. PS is 285, and then we need to debit the SME columnar. SME columnar, we need to debit the journal 6, which is for in ordinary share 15475. 15475. 475, and the veteran is bank. So that's all for debit side. And for credit side, we need to include the ordinary share, preference share, everything. So from the additional 6% preference share, ordinary share, retained profit, general reserve, and also RA. So this preference share we need to take from journal 7, 8 until 12. So 200,000 in PS. So ordinary share is 886. Retained profit general reserve and also the RA is from the realization journal 10, which is OS is 303, and the PS will be 85,000. So we need to pass everything, and this account also should need to tally with debit and credit side. So they have been tally. And that's all for the question B, which is journal entries for peace. So for the third question, which is C, is they had asked for C, they had asked for prepare relevant journal entries in the book of access. So this defined as closed book, closed book, is, and now we need to do an open book of access. Okay, first the journal entries for access. Okay, we need to do totally four journal in open book of access. So for the journal one, it will be carry out the purchase consideration. So in open book, we need to transfer the purchase consideration to business purchase account. So the debit is BPA, business purchase account, BPA. And here we need to credit the fees account. So the amount will be same from the goodwill. Okay, then for the journal 2, we also need to carry in all the assets. Okay, for journal 2, we need to debit all the assets, which is land and building, plant and building, and fixtures, inventories, debt receivable, and also bank. And we need to credit, we need to add the goodwill here, and we need to credit it into BPA, which is business purchase account. So for this, we need to take the amount from the goodwill. So this we need to copy and paste it here because these are the amount from piece. So we need to take all the amounts of piece to open book of access. So bank will be bank 67875, and the goodwill is, this is the goodwill amount, and we need to plus everything. One 1719220 journal 2. So journal 3 is as usual for liabilities. Here we need to do business purchase account credit, and debit is trade payables. So the amount of trade payable is same as piece, which is 40370. Okay, the last one is journal for. In journal for, we need to carry out the all one of piece. So first we need to debit this all from purchase consideration. So debit piece and credit the ordinary share. Credit 6.5% preference share, 6% debentures, and also credit bank. So for here ordinary share we should take it from here, and also until debentures. Okay, for the bank we need to calculate the amount that access company had been paid. So the bank amount here is 9,500, and in the question they asked 25 percentage, so we need to calculate with the 25 percentage. So the answer will be, bank. Oh, sorry. Yeah, for journal for bank, we need to take it from this. So we need to calculate this 11,000 times 65. We need to plus this. So for the bank amount here, we need to add the. Sorry, I was confused. And the bank account we need to add here because we need to get the total PC of piece in the journal form. So it will be same. And that's all the open book access. And after journal, we need to do business purchase account, and last is Sophie immediately of Sophie. So the business purchase account I'm doing beside it. So for the business purchase account, at the debit side, we need to put the we need to credit the journal 1 and journal. We need to debit the journal 1 and journal 3. So the first one is fees, and also head payables. And for the credit side, we need to take the amount from J2. Okay, J2 until the bill. These are the amounts. And the total will be. This account also need to be tally with debit side and credit side. Then only our calculation consider as correct. So for here, okay, the DPA had been tally. So after the DPA, the last calculation is Sophie. Sophie is an important calculation that determines your whole calculation tally or not. So for Sophie, I do here. Okay, for the first one, I need to list down the non-current assets that given in this calculation first. The non-current assets are non-building plant and machinery. And also goodwill. And then current assets are inventories and also net receivable. And that's all for current asset. And then equities. Equities ordinary share. The question is 6.5%. Yes, and here is 6% PS. Debenture is non-current liability, and PS general reserve. General reserve and also retained profit. Okay, after the equities, there will be non-current liability, which is the question required for 5% debentures and additional required for 6% debentures. Third is the last one is current liability. Current liability is trade payable. And payable. So for this, Sophie, we need to do 3 calculation, which is for excess, absorption, and total. This absorption and total. So for the excess, we need to take it from the question from the excess. So the land and building for the excess is 960,000. Land and machinery 250, 100,000. And we could not add the goodwill because it is in the absorption. So we need to plus these 3 in red color. So for the inventories also we need to take from the Sophie. Then is 510123. And trade receivable is 189,700. But for the bank, they have for the bank, we need to calculate it. Eh, bank, okay. Okay, the bank is correct. And then we need to plus these three. So after we got this, we need to plus this two. Okay, for the excess equities, we also need to take it from the Sophie. Okay, what do you share? 765,000. 6% preference share 250. General reserve 64,200. And the retained profit is 680,000. If the non-current liability here, 5% debentures 350. Okay. And the trade payable is 160,700. So we need to calculate this plus trade payable, and we will got 226,9900. 700, 5,000, 680, 264, 200. Sorry, I wrongly had input a number. 260, 510, oh, 100. I forget to add 100. And that is been tally. And then for the absorption, we need to take the amounts from goodwill, land and building, time, machinery, fitting and fixtures. Okay, goodwill, land and building. Okay. We need to paste it here, and then the goodwill, add the goodwill here. And then we need to plus this above. Okay, same goes to the inventories, bank and trade receivable. Inventories, bank, okay, for the bank, we need to take the amount in net asset value from here and minus the liquidation expenses in purchase consideration. So for now, add everything, and then we need to plus this 2, and the amount is 1715370. So after that, we need to get it from here to make the account tally. So for this OS, we share, we need to take from goodwill, ordinary share. Okay, this is 285,000. And then general reserve on F, retained profit on F. Okay, 6% debentures. 6% debentures, 390. 390. And then the trade payable is 40. 370. 40370. And then now we need to calculate this all amount. Okay. So Sophie had been tally. For the total amount, we need to plus the excess and absorption. So that's all for the Sophie. The account had been tally with the total number of 3985270. So this is the for the last question, Sophie. And that's all from me. Thank you for listening, madam.